Hello and welcome to the Road to Autonomy. The Road to Autonomy is brought to you in part by Stantec Generation AV. Stantec Generation AV combines some of the most experienced AV experts in the industry with the resources of a global engineering firm. Stantec Generation AV provides education, consulting, assessment, and guidance to any industry interested in autonomous vehicles. Learn more at stantec.com.
Listening to Road to Autonomy. This is the 100th episode. We're super excited to continue producing episodes about the future of mobility. Here's big cheers to the next 100 episodes.
Hello and welcome to the Road to Autonomy. I'm your host, Grayson Brulte. On today's episode, we're absolutely honored to welcome back once again David Welch, Detroit Bureau Chief Bloomberg, and author of the upcoming book, Charging Ahead, General Motors, Mary Bara, and the Reinvention of American Icon. David, welcome to the podcast.
Thanks for having me. Great to be here.
I'm excited to have you here. Today's a big milestone. The Road to Autonomy turns episode 100, and for the listeners who tune in each and every week, it means a lot to me. So thank you so much. Thank you for the great feedback and the comments, and here's to another 100 wonderful episodes. And David, you're now episode 100, so let's rock and roll, sir.
Let's do it.
Consolidations in the air in both the EV and AV markets. Who do you think makes the first move and starts the dance party?
AV or EV?
Let's start with AV, and then we'll work our way into EV.
So, I've talked about Too Simple being somebody who could end up selling out to someone. But, it's still, Too Simple's still pretty expensive. You're still talking at least a couple $1 billion to buy that company, and who knows when the technology will be truly ready. There are a bunch of others that either tried to spec and didn't, or, would have technology plus AI and Embark. If somebody wanted to get into the trucking side of autonomy, I think they could be bought. Aurora could as well. But I think there's a lot of resistance there. And I think they'll be one of the last who would be selling. And, not all these companies have to sell right now. But if capital markets stay as tight as they are, I think you're going to see a lot of action there.
Because if you look at these companies have massive cash burn. So Too Simple, you mentioned, so they've got $1.15 billion in cash, only $50 million in debt, but their cash burn, they're burning hundreds of millions of dollars. It's going to run out at some point. The company's currently valued at $2.2 billion. So basically the tech's only valued at $1.1 billion. However, it's a dual class shareholder system where the founders control it. Will that turn a potential acquirer away and say, wait, too complicated, too messy, and perhaps go to another company?
It depends on how flexible the two co-founders are in terms of a sale. I mean, that is a problem. It's sort of like why nobody ever makes a run at, like no activist ever makes a run at Ford, right? You've got family ownership. And so you sort of have that here with the co-founders to the degree that I think one of them really doesn't want to sell. But if they can't raise money, and that's one of the few things they can do, then they would have to, right? Like, how else do you keep the company going if the capital markets aren't giving you cash? And I don't think the electric vehicle startups are having a tough time raising money, and when they do, it's very expensive. They actually have a product that'll go into production soon, and we know who would buy it. AV, it's just so open-ended as to when you start to get a return on this technology.
On the EV side, so Rivian has $16.4 billion in cash. Lucid has $5.4 billion in cash. You're building out manufacturing operations. It doesn't seem, even though that seems like a lot of money, it doesn't seem like it's going to take you very far in a manufacturing process.
Lucid, of all the EV startups, Rivian's obviously the best off. They have the most money. Lucid is sort of a distant second. I think they said they have enough money for a couple of years, but they're going to have to go back and raise money. There's no question about it. And all of the others, I did a table on this when I wrote about this financing issue a couple months ago. I think all of the startups combined have raised like $6 billion, other than Lucid and Rivian. And Lucid is maybe, I think, raised 8, or they've got 8 billion. I don't have the numbers in front of me, but for that matter, Rivian will have to go back and raise money as well. But Lucid can hang in there for a couple of years. They've got cash and they've got Saudi backing. I think they've got staying power based on that. The others, all Fisker, Lordstown Motors, Nikola. That's where it gets tougher because they've all got less cash, and they're all, in order to industrialize this, they've simply got to raise more money.
You have the Saudi Sovereign Wealth Fund clearly backing Lucid. Do they at some point try and get strategic and merge it into VW, perhaps?
It's a possibility. I'm not sure the will is there quite yet, but all of these deals are something that could happen.
Because if you look at deals on the EV front, I look at Rivian. So you have the Amazon money in there, you have the Ford money in there. They had the big write downs. Where's Rivian going to go? Because you have the R1S and the R1T, so for the SUV and the truck, and then you have the van business. But GM's doing a bang up job with BrightDrop. The vans are out in the field today. If you read these reviews from FedEx drivers, they love driving them. Does that become an Achilles heel for Rivian?
I think anyone, look at electric last mile is already pretty much wiped out. Anyone trying to get into this business, including Rivian, they're going to have a tough time because Ford and GM not only have vans that are already being built, and they've got the industrial prowess in the factories to make a big go of it, but they've got sales divisions with fleet customers that they already sell pickup trucks to and vans and other vehicles. They've already got tentacles into that whole business. And everyone else is going to have to build that. A sales and distribution network on the commercial side is different. Now, GM is building a new one essentially with BrightDrop, but I know that BrightDrop and a guy named Ed Pieper who runs GM's commercial fleet business, they talk a lot. So when his customers want to buy electric vans, he's going to send them over to BrightDrop, and they'll find a way to make it happen while they're building up their own sales group within BrightDrop. So Ford's doing it through Ford, which has already got a great commercial business. So yeah, everybody else has, everyone sort of snickered at the old school car makers having to catch up in electrification and autonomy. But now that they're there, all those assets they have that everybody sort of said were worthless actually are worth quite a bit.
I got to give a lot of credit to GM. Under Mary Barr's leadership, they made the savvy move by getting Cruise, which now looks like a bargain if you look and you project into the future. And then BrightDrop, about 2-3 months ago, acquired a company called Moraine from Damian Scott, which has done energy management. And so they're probably going to manage the energy of the grid that's going to tap into the BrightDrop. That can give them a competitive advantage. How is GM acquiring all these strategic companies? And then does that give them a competitive advantage that they're getting some of these startups that are developing technology before somebody else is?
It's a possibility. I had a sit down recently with GM Ventures, and everything they're buying, all these startups, a lot of technologies, a lot of it is to either enhance battery autonomy. That is another area where it could give them an edge. It depends how good their venture fund is at going out and buying these companies. Do they buy the right ones, right? GM bought Strobe a while back to give them this LiDAR for Cruise, and we don't really know where that is just now. So sometimes these things don't work, but at least they've got the ability to go out there in the market. They've got people who are scouting deals and technology to go get it. And I think, it's sort of a ball and a strike for whether or not a startup wants to go into business with GM. The good side is whatever technology you have, you could get it into this huge scale of GM vehicles that are built. Bad part is, and it's not totally fair all the time, but there is this reputation, okay, you're going to work for these tired old car companies or these huge corporations, and you can get sucked into that culture. Not just GM, but Ford, any big company, and you're no longer that kind of hip, cool startup. Well, those companies are left alone, but there's, sometimes the founders have concern about going to work with those guys. If I'm trying to get my technology and whatever it is in a few million vehicles, going to work with Ford, GM, or any of the established car companies is the way to go. So they have a bit of an edge there, sure.
With the established car companies, I think a lot about Argo and looking at Ford's debt levels and hearing rumblings that the VW Ford partnership is not hip, hip, hooray. How long does Ford continue to fund Argo?
I think the same as how long GM will fund Cruise. I think these guys are in for a dime, in for billions, unless they sell it. And I don't know who'd buy it because the valuations are even higher than Too Simple. Their choices are, it's extremely binary here. Keep funding it, and GM's putting about $1 billion a year into Cruise, or let it slip away and kind of die. And I don't think either one is going to do that. The third option is what both of them have already done to a certain degree, which is sell stakes in the company to others, right? So Ford essentially restructured ownership to bring VW into Argo so that, they get vehicles and they get financial help funding this thing. And GM, even though they bought back their stake from SoftBank, they still have Microsoft, they still have Honda in there, and T. Rowe Price, and they all put a few $1 billion in total into the company. Could GM go back and do that at some point? Sure, they probably could. They're not going to do it right now because the value is pretty low. These values are somewhat based on how the market is doing. And tech stocks have been beaten up. Autonomy stocks have been beaten up even worse. GM is just finally starting to commercialize this thing, so the financial results are startup worthy, huge losses, lots of spending. So you wait until it looks like you've got a real business coming of age or getting, at least some proof points, and then you go when your valuation is higher and sell stakes and get a lot more money. I do think both could end up doing something like that, particularly Cruise. Whenever Mary Bara is pressed on this, she said, we didn't say we won't spin out or IPO or sell Cruise. We just said we're not going to do it now. And I think that's important. One, the valuation's bad too. At the time she was asked that question, Dan Ammon was still the CEO. There were clearly issues over control. That has been resolved. She has all the control. And so if they were to IPO it now, it would be, with people they can work with. Clearly she and Dan had lost the relationship to work together. But that's still a ways away. Everything they're saying and everything that, the progress of the business and where the market is right now, there'd be no time for either of these companies to sell stakes or spin it out.
I think a lot about, I call it the AWS moment. It was maybe 10 years ago, 8 years ago, when Amazon for the first time ever broke out AWS revenue. I think the stock was trading at $300, then $380, $390 pre-split, and it went bonkers when they broke the revenue. When does Alphabet through Waymo and GM through Cruise, what is that financial number when they start breaking out revenue? Is it $100 million a quarter in revenue when they have that moment, say, hey, this business is starting to go? When is that moment?
I don't know that it's monetary or there's a number on it. I think it's more when it's a good question. And I don't know that anyone's ever asked them, they've hinted. I mean, first off, they do report for Cruise now, and they've sort of hinted that they might have some sort of profitability reporting for their electric vehicles, and to other companies who have similar operations start to do that. I think it's more of a strategic thing. Take GM, like if they've already got some reporting for Cruise, but if they want to separate that business even more in some way, I think it would be more aligned to closer to when they might IPO it, and I think that's quite a ways away. And I think the same would go with Ford and Argo. Is they've already got these businesses that are kind of walled off in some very meaningful ways. I mean, they're basically separate companies with vast majority ownership. The
argument could be made if they break it out that autonomy is working. Look, we're actually generating meaningful revenue. My only concern is I give Cruise a lot of credit. You have Gil West, who was former COO of Delta running operations for Cruise. He understands how to build a business, how to build a profitable business. Got Anthony Gregory under him. They're doing wonderful jobs. Does Argo have the right business team in place? The talent bench to develop the business plan similar to the way that the talent that Cruise has to develop that business plan?
They don't have a bunch of airline guys, but I think they do. And I think you'll see them add more to that. I mean, if you look at where they are, from what I understand, their technology is pretty good. And it's always tough to gauge who has the better technology, Cruise, Waymo, Argo, anybody else out there. You don't always see what they're working on. But Cruise and Waymo are, they're operating in cities. They can charge money in certain places. They have services that are going, whereas Argo's more in the testbed phase. It probably doesn't give them quite enough credit, but they're not quite in actual deployment the way Waymo and Cruise are. And I think as they get ready to do that, you'll see them add more of those people. But they do have quite a bit of talent on board, I think, that particularly on the goods delivery side, because that's where they've been focusing lately, to really try to make that work. But it's hard to say. Is their COO from big fleet consumer business like Gil West and Delta? No. That was a great hire from GM to get somebody who's been moving passengers around in a pretty complicated business.
And then Gil's been on the podcast before. He understands the fuselage. If you look at the Cruise Origin, there's a fuselage. Okay, we have to replace the seats. We have to replace the seatbelts. He fundamentally understands the maintenance business, which is going to be a big part eventually the robo-taxis. If they're going to have to get cleaned, they're going to have to go somewhere to sleep, they're going to have to quote unquote get refueled and get charged. It's very similar to operating a large global international airline. That's why I give them a lot of credit there.
There are certainly parallels with running an airline and running this business. I've wondered how parallel it is. I mean, one is you have a fixed number of seats on a fixed route, and the challenge is filling that plane to a profitable level and scheduling your flights so that you give good service, but also make money doing it. It's so much more fluid with a ride-hailing business because you don't know the passengers want you yet. You have to sort of fleet up to however many people want to ride around San Francisco. There are some proxies for that with looking at Uber and Lyft volumes. And I know they've done a lot of research on this where they know that you need a lot fewer vehicles going up and down the Embarcadero, that main drag in San Francisco near the bridge. You need fewer cars than one might imagine to get people around. They've told me that. They've done work on this, but the whole managing the fleet side of it, I think there's going to be a lot of trial and error there too.
When looking to the future, do robo-taxis actually achieve profitability?
Oof. They're not cheap right now. Cruise said when they started charging in San Francisco that they were undercutting Lyft and Uber slightly. And those guys were charging an average of around close to $6 a mile. Now, the funny thing about that, though, is they had a screenshot of one of the rides they were giving. And the cost per mile for that ride was over $7. So it depends on how far you go. But my point is they're charging a pretty good amount of money for this. Now, it's going to depend on volume. They need a lot of volume to make money. It depends on what kind of profitability. Overall profitability, going to take a long time because they have all these R&D costs and everything to amortize. But just an operating profit, that's a good question. They say that, remember when they were talking about getting it down to 70 cents a mile, the fare cost, and still making money? So clearly they think they can do this for way, way cheaper than Uber and Lyft are because there's no driver. But at this point, I don't know because they're not running that many vehicles and they're running 10 p.m. to 6 a.m. So they're probably not getting a huge volume of riders either. I think they're going to have to get into broad daylight hours, serious volume. Or actually, I interviewed the CEO of Hertz, and they've improved their profitability. One, because rental rates are high, so there's great pricing. But he calls it, he said, look, I'm really sweating the assets here. It means he's running those cars. He's renting them out much more at higher rates than Hertz used to back in the days when their profits were pretty weak. And that's what Argo and Cruise and Waymo are going to have to do. These cars are going to have to be in use, carrying people a lot. They can't be tooling around the city waiting for somebody or just sitting in a depot somewhere. They got to work to make money. I don't think this is, there's an ex-GM executive who was talking about this business, and he said, look, this is not a high margin business. It's just one that they can do and has the potential to get very big in terms of revenue.
You look at the potential to get in revenue. We had the Disney earnings that came out yesterday after the bell. And if you look at the acceleration of park spending, and I went to Disney World over this summer, there are an enormous amount of people there that are spending like drunken sailors for anything. You see the lines in the gift stores, and I'm watching the register, $200, $100, this, that, bottle of water, $7. And they just spend. You have a pent-up audience that's willing to spend like a drunk. Why not deploy in Disney World where those vehicles can be utilized on demand? You can charge a premium for it, and you start generating a very healthy, and I'll go on a limb here, eventually a profitable business.
There are huge expectations that all of this is supposed to make. It's going back a couple of years, and a lot of expectations have been reset. But people are looking at this as like a $3 or $4 trillion business, right? In terms of total addressable market. I don't think it's going to happen that big, but the only way I think you start to make a lot of money on this is if you get some piece of that. Now, I think the good news for the players that are in it is think about how many were in autonomy 3-4 years ago when we were talking about the size of the market. The market's not $4 trillion like they said it was, but there hardly anyone's in it anymore. The German automakers are kind of working with suppliers, but they're really not pushing into this. Honda is tied at the hip with GM because they're invested in Cruise. Toyota's always been a bit skeptical about this business. So really, it's Waymo, Ford, GM, and to some degree, Tesla. Tesla obviously has a program of self-driving vehicles and technology, but they haven't really talked about a robotaxi business this way. And that is one thing Dan Ammon told me. He sort of saw robotaxi being like operating systems, whether it's Android versus iOS or Microsoft and its handful of competitors. You're talking about a small number of players who are still standing, who are even developing the technology and the operating systems for these cars. By extension, they're the only ones who are going to be running the taxi services, because why would they sell it to somebody else? They could end up, if they let's say GM or Ford proves to be a lousy operator with this, and they've never been, frankly, great at B2C businesses. They're wholesalers. They manufacture vehicles and sell them to retailers, they're dealers. I mean, that's why they hired people like Gil West, so they can figure that out. But that's the only way they'd sell it, is if they just can't do it. So you'll end up having a small number of operators. So whatever the size of the market is, it looks like we're going to have an oligopoly of robotaxi services. That's what makes it very profitable as it scales up.
Going back to the 90s when Bill Gates was still CEO of Microsoft, they licensed Windows everywhere. You're buying a compact computer, you're buying a gateway computer, you're buying an IBM computer. When they actually still made computers, you had to pay for that Windows licensing fee. And that Windows, I think it was over 80 or 90% at one point of market share. Do we get to a point where one of the CEOs of Robotaxi says, wait a second, we can license this for a lot of money every month? I remember John Kravchuk, when he was CEO of Waymo, made some remarks about it. Did we get to the point there where it becomes a giant licensing play?
For Waymo, maybe. But I'm not sure anyone else wants to operate this kind of business. Now, do they license it for personal autonomous vehicles? Is that where you're going with this? That could be. And that's what Ammon was talking about with a handful of operating systems. And you look at the cost, the risk, by the way, of developing this software. I mean, look at how much scrutiny and regulatory strain Tesla is under right now because of the problems they've had with autopilot. That's risk for anybody too. So is it better for someone to license it? Yeah, I think there's a business there. Waymo is not a car maker. I think they want to provide this service because it could be a subscription service or fee service, and that's more along the lines of what software and technology companies want to do rather than make hardware. But yeah, I think they could. I mean, look at some of their partners now, right? They've worked with Stellantis, their vehicles. Haven't they worked with Jag Land Rover, right? Could they license it to those companies? And any car company really that doesn't want to spend money developing this stuff. That is a big possibility.
You look at Alphabet, inside of Google, you have Google Cloud. They're under a lot of Wall Street pressure to grow their Google Cloud business because what Microsoft done is just grown that Azure business incredibly fast. If you're going to license Waymo, you can tack on some sort of Google Cloud subscription there, and you start to generate that Google Cloud revenue. That becomes interesting. And they'll take it one step further. Do they take the advanced SAE level 4 tech and make it an advanced version of ADAS and say, okay, Jaguar Land Rover, we're going to put a level 2 system, an ADAS system, in a Land Rover, and we're going to charge X amount of dollars? Does that become a possibility just to start generating revenue, or am I going too far backwards?
For level 2, I think you're going too far backwards. For something that's more like level 3, level 4, yeah, I would think so, because these smaller companies are going to have a tough time keeping pace. I mean, you look at GM with Super Cruise and Ultra Cruise, and they're starting to get assistance from Cruise on developing those. So it's going to be tough for other car companies to keep pace. Ford has its Blue Cruise system, and most of the reviews I've read say it's not as good as the GM or the Tesla systems, but they have a program, right? Mercedes has always been pretty good at this. They're the ones who started adaptive cruise in the late 90s. So might have been 1996. So there are a handful of companies that are pretty good at the level 2 stuff, but getting to level 4, let's call it that level 3, 4, where I think Ultra Cruise is going to be. I don't know. The levels are, I think, not adequate anymore. I think we need 10 levels, not 5. And that would be too confusing of a scale anyways. So let's call it somewhere between 3 and 4 is where the advanced assisted drive systems are. I think it's going to be tough for a lot of other companies to do that. Now, why would GM license that out? It's an advantage for them. Cadillac customers love it. So they're probably not going to do it. Waymo want to kind of take a step back and sell that? I guess they could. I don't know if they are, though. I mean, do you have anything saying that they're working on kind of a more simplistic system that they would license out?
I don't have any data to back it up. I've just started running financial numbers and projections of what I think it could be, and looking as an owner of a JLR vehicle, what I'd like to see. I just wrote this down. Perhaps for an additional month, I pay, say, $5,000 extra for the vehicle, and then I pay, say, $100 a month, for example, and I get something called Waymo Drive. It's highway only, hands off with driver monitoring. So if I'm going to go from, say, my house on the highway to Orlando and I could use Waymo Drive, that changes the game for highway only. That becomes a very interesting way. So then all suddenly I'm paying you $1,200 a year. You multiply that across millions of vehicles. You figure out what the margin is. Alphabet it's not going to make an impact, but now they can go to investors and say, look, Waymo's starting to generate meaningful revenue. That becomes a very interesting business as you work on the robotaxi business and you work on the trucking business.
It is. I mean, it may, they're going to get some robotaxi revenue, but I think we've sort of known here for around the time Krafchick left that maybe Alphabet was getting a little bit impatient with the pace of monetization of the business. Yeah, to the degree that they can find other ways to do it, that's great. But I think they're probably going to make money off robotaxi faster than they would with that, because there's really no evidence that they're already doing that business.
That's a good point. And I look at the robotaxi, we haven't touched on it, is Zoox. They were left for dead, then Amazon swooped in. The interesting thing on Zoox was Walmart actually kicked the tires and buying it before Amazon swooped in and buying it.
Yeah. Now, the thing is, people tell me that Walmart kicks the tires on a lot of things. They don't do a lot of deals. This could be different, though. Management's younger, and they're clearly trying to push into some of the business that's traditionally, they have pushed into a lot of the business that's traditionally been Amazon's kind of way of doing delivery. Yeah, we got to remember, Walmart may be, the brand image is not exactly high tech, but this is a company that revolutionized shipping and shopping. And the willingness to innovate and change is still there. And I think they are shopping around. They're going to need an automotive partner. Clearly, they're working with Cruise. They're working with Ford. They've got a few different projects out there. Do they more actively get into this by buying something? Yeah, could be. Especially, you think about, why would they want to buy something like Embark? Say, wouldn't necessarily be for last mile delivery. It would be more, I think, just think about the amount of goods they ship between their distribution centers and the stores. And that's a great application for autonomy and for electric vehicles, for that matter. Predictable, it's the same route all the time. You know when they're going. And while the trucks are being unloaded, you recharge them because a lot of them will be electric. And for autonomy, it's a set route. And it's simple for the most part. You're going from an industrial park to a huge store in a shopping area off some main drag. So it all lends itself to that. It depends how they want to structure that. Do they want to buy the hard assets and the vehicles, or do they just partner up with a vehicle company that's going to use their software? That's the connective tissue is tough for me to figure out what they would want to do. So let's say they bought an autonomous vehicle software company like Embark with a system. Whose truck do they put it in, and how do they work that out? Embark has relationships, but do they keep those? How much upstream does Walmart want to go on this? And what's the benefit, right?
That's the question. What is the benefit? But Walmart has the very public relationship with Gatik. They're doing the middle mile on the fixed routes. Do they just swoop in and buy it? Because here's the funny part with Walmart. Walmart's working with the majority of the autonomous trucking companies. And they're working with several of the other autonomy, but the only one they've really gone public with is Cruise to some extent. Not very big. They're the pilot in Scottsdale, Arizona. But Gatik, they are very public. Gatik was at the UP conference, which the Walton family put on. They're very, I don't want to say, I don't want to use the term glued at the hips, but very public with them. Did they step up and make a big move?
I don't know. That kind of thing hasn't really been in their DNA necessarily to go up and make a big move like this. I mean, it would shock us all if they did, right? I don't think they're going to want to necessarily own these assets if they don't have to. They just need the benefits of it. I don't know if they want to go and buy all this stuff because, and again, the stuff's expensive right now. Now, in terms of autonomous companies and buying those things, we're already talking about the need to raise capital and the difficulty of doing so. If that only gets worse over the next 12 months and these companies get in more dire straits, then it gets more interesting because you've got, you could have a fire sale for some of these assets. Then buying these things becomes a little more likely.
I don't think you're going to see a fire sale at Gatic because you have the Koch money that's backing them tremendously, both financially and politically. They got the Kansas bill done. Great job, Rich Steiner, on that bill. So you basically, Koch pretty much has unlimited firepower if they're going to back you. So I don't see Gatic going there. My concern with Gatic is, I believe you wrote the story for Bloomberg, if and when Cruise teams up with BrightDrop, that becomes a huge competitive threat to Gatic for the fact that GM has the ability to manufacture vans. Does that put a dent into that model?
Yeah, I think it would, especially because you've got a Walmart relationship with Cruise already. It all gets down to how fast Cruise would want to do that. Here's the issue. Here's something I wrote about too, is Cruise is so focused on robotaxi right now and working the bugs out there and getting that business up and going, that getting it to a point where they can pivot and start to focus on working with BrightDrop I think that's a fair amount of time down the road, because on the GM side, Mary Bara has talked much more about a personal autonomous vehicle than they have about BrightDrop. They've sort of hinted about BrightDrop. I know there's some work being done, but it's really, I don't think there's a big team of engineers with BrightDrop vans in San Francisco right now. I think there's kind of some planning and talk kind of work at a high level. I don't think they're doing much with it. I think kind of similar priority for the personal AV too. And then you look at the setbacks Cruise had, with the cars crapping out at an intersection and an accident they had. At the end of the day, those weren't terrible accidents or anything. No one died. But it's a bit embarrassing, and it does raise questions that if you've got this problem with the software, what if, right? They need to work these things out before they get into that commercial business. But their eye is on it, and they're uniquely positioned to do it. In a way, it could be a better business than the robotaxi business, but the amount of goods that need to be shipped. But we'll see. The
what if question is something I think a lot about as it relates to Aurora. So Aurora has the robotaxi side of the business, which you don't hear very much about. You don't hear it publicly. You don't hear much about it on earnings calls. And they have the trucking side of the business, which you hear a lot about on earnings calls and you hear a lot about publicly. What if SoftBank, who's in big financial debt trouble because Massa's over the top bet, says, okay, he steps in and tries to merge Uber Freight with Aurora, and Chris can just focus on his car business and Sterling can go on the trucking business, because SoftBank's the second largest shareholder with 11.8% of Aurora, and they own stock in Uber as well.
Let's look at where Aurora stock is. Like a lot of these tech stocks, it's taken a beating. Trading over $3 today. That means SoftBank can't sell, but they already got out of Cruise. They've got liquidity issues over there. How long do they stick with this? I don't get the sense they want to build the autonomy business. I get the sense that maybe they want to and need to back away. Enough of their bets have gone badly. They're making liquidity moves here. And again, the payoff on autonomy is just far out. So, God, do they double down? I don't know. That's tough for me to see.
Because I just don't see how Aurora survives in its current stance. The reason I bring up Uber Freight, so in 2021, they did $2.13 billion of revenue. In 2022, this year, they're projected to do $7.5 billion of revenue. Very small margin. It's only a 1% profit margin, but it's, I know it sounds crazy, it's profitable at a 1% margin versus all the taxi stuff. And then if you're moving all that freight and then you have Uber's technology for the trucks, you might be able to get a competitive leap over pretty much everybody, including Waymo.
If they can continue to develop at this pace, right? Because it gets back to that issue of cash that we've been talking about. They do have good technology over there. There's no question about that. And they've got some very smart people. There's also seems to be, and I think you might be more steeped in this than I am, a bit of drama behind the scenes. So you wonder about the staying power of the business in its current form. I think they need a partner, real partner with money and vehicles and everything else. Maybe an equity tie-up sort of thing.
They need an exclusive partner, and it's funny. It reminds me, going back to the Doggy Style Snoop Dogg album, there's so much drama in the LBC, and you could say there's so much drama inside of Aurora. Word on the street is they're losing the exclusivity of Volvo. They're losing the exclusivity of PACCAR. Both companies are actively shopping deals. They had U.S. Express, then U.S. Express then went and got another partner. And then they got the Uber Freight deal, and then Waymo cut a deal with Uber Freight. It just seems that there's nothing exclusive there. What they do have, and I don't know what the value of it is, I heard it's in the billions, they have a lot of patents, and they can raise debt on that, but that's only going to take you so far. Because if you're burning cash for an auto business, for PACCAR, and you're burning it for truck, I don't see how you do it. I think the company has to split into two, and if they do split into two, how would the public markets value Aurora either without the PACCAR business or without the trucking business? And put it in perspective, their market cap's currently $3.1 billion combined today.
Yeah, well, let me look at that again. I've got $3.6 billion. You're talking Aurora.
Yeah, I was yesterday. So they went up $500 million today.
Yeah, the stock is up actually like 40 cents. And again, even though the stock is battered, show you how overvalued these things were in the first place. Because the stock is battered at Too Simple and Aurora, and they're still worth a few $1 billion each. And no one is going to take them out at this price because nobody wants autonomy that bad at the moment until there are more proof points. That's the barrier to selling, even if they wanted to. And it's even the barrier to an equity tie-up where someone's going to have to come in and buy a piece. Because say you wanted to have, like you're saying, an exclusive partner, and they wanted to buy like 10% of the stock. It's still $360 million today, and maybe you have to put a premium on it. It's a real tough spot if they want some sort of M&A deal like that. They could do regular JVs, but they're already doing that.
Do we get a U.S. class railroad that steps in and does it? And they generate $169 billion in combined revenue in 2021 with a 3.39% free cash flow yield. You can basically extend the railroad, get a virtual railroad. You don't have to deal with all the environmental issues, the track issues. Do they step in and get very strategic?
Yeah, I've wondered about that. It kind of takes me back to the Walmart discussion. It makes a lot of sense for railroads and for Walmart and for Amazon to have electric and autonomous vehicles and use them and work them into their system, both for ESG and also for cost reduction and all the things we've talked about. Do they have to own it? I mean, do they have to own the assets? Do they have to own the companies that write the software? I think they would prefer not to. And I think the only reason they would is if it was looking like one of their competitors was going to essentially hoover up one of the players they need and lock them out. Otherwise, they don't really need, Walmart's partnering with multiple players. And I think that's smart because, let's say let's say Amazon bought one of the companies, let's say they bought one of their JV partners to lock them out. Now they're still working with Argo and they're still working with Cruise. They've got fingers in pots. I think the only reason a railroad or anybody buys this is if it looks like they can no longer get access to the technology they need to work this into some sort of intermodal system. Remember, railroads, they're not super high cash flow companies either. So they have to be wise with how they spend it.
They have to be wise, but you had to move CSX. They acquired a trucking company because they're trying to capture more of the revenue. Let's just fast forward, say, 12 months. These companies are beat up and they're, say, half the valuation today. Perhaps a board says, okay, we're getting this company for pennies on the dollar. We can afford to fund it and build it out, and somebody just takes an opportunistic bet.
The key is the pennies on the dollar. I think the only way we're going to see deals on some of these AV companies is if the technology is still good, they're just super cheap. The stocks get pounded even more, which is, in a way, is kind of tough to imagine because they're already so cheap. But they went out with such big frothy valuations in the first place that it's very expensive to take them out.
The market's correcting itself. I mean, Rivian's down 80% since its stock peaked in November. A lot of the froth is coming out of the market. The market, as you clearly know, is rewarding companies that are profitable and cash flow. I know it's not an automotive business, but Airbnb came out to a lot of hype, but it's profitable, and they're buying back $2 billion of stock. Somebody in this automotive autonomy EV space needs to emerge as the Airbnb and focus on profitability and growing your business, and then shareholders will reward you for that. And it's funny because Airbnb's got $9 billion of cash on their books. So it'll be interesting to see. I want to dive into books here for a moment. So you wrote Charging Ahead, General Motors, Mary Bara, and the Reinvention of American Icon. It comes out on September 20th. Why was now the right time to write the book? Because I want to read the foreword to the audience. And the foreword, you open the book as follows. On December 10, 2013 at 8:46 a.m., Bloomberg News and a 1,000-word first draft informed the world of the biggest business scoop of the year. Mary Bara, whose career began on the factory floor as an intern, would succeed Dan Akerson as Chief Executive Officer of General Motors Company, the first woman CEO in the global automotive industry. Why was the time now to write the book and tell the story?
The short answer is we're sort of at the forefront of the big phase of the transformation that she's been working on with this company is finally, I stress, rolling out. You've got a Cadillac Lyriq electric vehicle for sale, the Hummer's for sale, and they're starting to do all the promotional work for the Chevy Blazer EV, and they've already done that for the Chevy Silverado EV. Pretty soon they'll be talking about the Chevy Equinox EV. Those three, which are the mainstream EVs, come out next year, starting spring and rolling out through summer. So you got two big luxury vehicles, electric vehicles, getting underway, ramping up production now. This is what Ultium, that battery platform that they've been talking about, that's what this is all about, is democratizing electric vehicles. Big hulking Hummer, elegant Cadillac, and then a bunch of Chevys that presumably middle-income buyers can get into. Because right now, let's face it, EVs are luxury cars. Even if they're sold under a Ford brand, these things sell for $45,000, $60,000. With Tesla, much more than that. They're luxury vehicles for people with multiple cars in the driveway. But what the book really gets into, it's not just about GM's EV plan. That's the culmination of everything they've been doing. This is a transformation of a company that Alfred Sloan built with this huge global empire. He bought Opel in 1929. So you're going back to the 1920s, almost 100 years ago, where he made GM this gigantic company, biggest in the world, most profitable in the world, most respected in the world for a lot of that time period. And they did business in 100 countries. That business went bankrupt. And some of it was fixed in bankruptcy. Bara inherited all kinds of problems. The whole international business was still a mess. So she's winnowed this company down to an extremely profitable core. And now she's investing in autonomy and in much bigger investment, electrification. So you're taking the gas-guzzlingest company with the stodgiest reputation, but they were everywhere, and now they're only in a few places, and they want to try to become they say technology company. I don't buy that. They want to be a high-tech automaker. All the stuff we've talked about with Cruise on this conversation is pretty much right. They're a credible player there. They're going to be, and I think are, a credible player in the electric vehicle business, and all that's been done on her watch. And I think she should get a lot of credit for that. One, for the company's profitability, and two, for becoming a credible player in technology. Now, they still have to execute, right? Cruise, and for that matter, autonomy, this is far from the finished article. A lot needs to happen. We've talked about that, a lot of that on this call. That's why a lot of what we talked about today was companies in peril because the technology is not ready, the business isn't developed, and they can't find any money. Cruise is in a better position than those guys, but still a lot of proof points. GM has to prove it with electric vehicles too. I think the Lyriq looks really good. It's getting very good reviews, but Cadillac as a brand kind of tarnished. The Hummer, they've sold this thing out, I think, into 2020, past 2023 model year. But, they've sort of taken some shots because it's just such a big, heavy beast and takes so much power to run it. They need to prove it with the other vehicles. There are a lot of consumers that kind of shy away from GM brands. Investors are far from sold on the company, even though for a while the stock was doing very well. So there's a lot of, this is sort of how I conclude the book. Hey, great work so far. Good plan going ahead. but you have to prove it. But I think now is the time to write the book because they're really making the big EV push right now and over the next, say, 12, 18 months. And, it's a book and it won't go on sale till this fall. So it's still a few months away. And then as the book is selling, people are reading about this, the vehicles that are in it will be hitting the market over the next year. You could argue might have been better for a Christmas launch instead of fall, but yeah, you're talking a few months here and there. I think now is the time that story's starting to roll out, though.
It'll make for good fall reading. You can pre-order the book on Amazon today. Charging Ahead, General Motors, Bara, and the Reinvention of American Icon by David Welch. Google it on Amazon. Pre-order it today. David does a fantastic job telling stories, and his articles for Bloomberg covering all things auto and GM are absolutely fantastic. And David, putting this all together, we clearly talked about this in the conversation, consolidation's on its way in both the AV markets and the EV markets. In your opinion, who will be the winners and losers from this round of M&A?
Again, so we're talking autonomy. I think it's the big players. I think it's Cruise, Waymo, Argo. They will definitely be winners. Aurora, Too Simple, Gaddick, they've got some pretty good technology, but just too much that's unclear going ahead. Electric, I think, look, I'm not a stock picker, but any of the small companies, they all have different business models that are basically trying to cope with the fact that they don't have a lot of money and they have huge challenges going up against the big boys. I think Lucid and Rivian have staying power among the startups because they have more money and they've got vehicles that are for sale now. All the other companies are saying, we're getting into production soon, and that's Lordstown, it's Fisker, got who else is out there, that Faraday, some of these companies, that they're all on precarious ground because they don't have vehicles that they're selling in decent numbers right now. In many cases, they're still trying to get stuff into production and get that proven out, and they don't have a lot of money. Again, like this whole group of them that I had in that one story have raised a total of about $6 billion. Whereas Lucid's got 8 and Rivian's got much more than that, and everybody else has a business generating positive cash flow. Do they make it? Think about that SPAC era over the past couple of years of just free money getting thrown at anything and everything. And now those same companies are issuing convertible debt at 11, 12% or more, or they have to sell equity at extremely dilutive rates. It's a huge turnaround, and that's what they're up against.
Inflation, we had the report today, went down about 0.5%, but if the Fed keeps raising, if they go 75 basis points, it's going to get more expensive to do deals. And David, as we look to wrap up this insightful conversation, what would you like our listeners to take away with them today?
You mean besides buy my book?
You have to buy the book. That's the most important thing.
Chargingaheadbook.com is the URL. We're in one of those precarious moments in a historic transition in transportation. This is a historic time where we're going to electrification. I make this point in my book, biggest change since the engine replaced the buggy whip and steam, because that's what was running it, 120 years ago. And autonomy, again, huge change to what it means. But in the case of both, we're kind of at this tipping point and tripping point. The tipping point for EV is how quickly we get battery costs down and what the incentives do to help from the Biden administration and from the Inflation Reduction Act to help boost sales. For autonomy, it's just how quickly this can work without more slip-ups. So tipping point for EVs, tripping point for AVs, and we'll see if they can get over the tripping point.
We'll see, but what we do know for a fact, on September 20th, your book, Charging Ahead, General Motors, Bara, and the Reinvention of American Icon comes out. Go to chargingaheadbook.com. Order David's book. It's going to be a fantastic read because the future's bright, the future's autonomous, and the future is consolidation and mergers and acquisitions. David, thanks so much for coming on the Road to Autonomy today.
Thanks a lot. Great to be here.
Thank you for listening to the Road to Autonomy podcast. If you've enjoyed listening, please rate, review, and subscribe on your favorite podcast platform. Want to get in touch? Follow us on Twitter at Road to Autonomy or email podcast@brulteco.com. The Road to Autonomy is produced by Brulte & Company. The views and opinions expressed on the Road to Autonomy podcast do not necessarily reflect the views and opinions of Brulte & Company. The content discussed on this podcast is for informational purposes only and should not be taken as legal, tax, investment, or business advice.